Folks, today is the first trading day of September 2020. It's Tuesday. This is our view of the 5-minute NQ chart with the adaptive entry system signals. We've actually released an updated version as of today that will now display the trend continuation signals with a T plus. So that basically is saying that the conditions are right for re-entering a trend. So if you originally got into the trend back here on the second blue bar to go long, you've already taken your profit, whether it be 5, 10, 20, or 30 points. Generally, those are the categories we track. And you're looking for another opportunity to re-enter. The T plus signal right here, as it's labeled, is going to give you an opportunity to get back into the trend and grab another 5 or 10 points of profit. So when you're in a long running trend, the T plus signal, the continuation signal, can give you a great opportunity to continue to take more profit out of that trend continuation. All right, so we're going to jump over to our performance for today. Today is the 1st of September. I'm going to scroll back to 7 a.m. Eastern time. We have people who like to just kind of scan the detail of the trades. 7 a.m. Last trade that I opened today was at 3:25 p.m. Eastern. All right, so here's our daily summary. 2 primary categories that we track, plus an additional category that I'm kind of zeroing in on and doing a little bit more research on. But the 2 primary categories that we track, when I say that, we actually track a variety of categories, a mixture of time frames as well as which signals are being traded. But when I say we're tracking these, I mean that we're going to take that performance information at the close of each day and we're going to plug it into our personal trading plan, and we're going to use that as a demonstration to see what a projected income could be based on a couple different scenarios. Scenario number 1 is trading from 9:30 to noon Eastern, taking all of the signals. That would be the trend continuation, the consensus, and the momentum signals. Now there's other things that we do pay attention to which are not accounted for in the all signal category, not yet, not until we do a little bit more research. But one of them is fractals. We've been trading some fractals and we're starting to gather data on that also. So we may see that the fractals is worth adding to the all signal category, but we won't do that until we know that it has a pretty solid basis of strength to it. The other category that we use to project out income on the personal trading plan is trading from 7 a.m. to 4 p.m., only taking the trend signal and the continuation signal. The continuation is something that we just added a signal for, specific signal, but we've been taking them. There was a different way to view it. Putting the T plus signal on the chart now makes it a little easier for each trader to identify, and you only really have to pay attention to the upper part of the chart, the price bar parts of the chart. All right, so today we actually had a losing day in our 9:30 to 12 category, down 10.75 points. Now, we've had for the last week or so some pretty big sizable moves right at the beginning of the day. And if you sit on the sidelines like I do frequently, you miss out on some of those big drawdowns. But I do track them anyway, even if I've not taken them, because it's really important to develop a full-on history. The further we go in time, 6 months, a year, when we get 2-3 years behind us, I want to know that we actually tracked each trade in that category, whether I took it live or not. And then in the 7 to 4 category, taking the trend and the trend continuation signals, we actually finished nicely up 25 3/4 points. So we're going to go ahead and start with our 9:30 to 12 category. We were down 10.75 points, and we're going to pull up our personal trading plan. Today is Tuesday, September 1st. We're going to go over to our data entry field, and 10.75 at $20 a point is a loss of $215. We're trading 3 contracts, so that times 3 is minus 645. Now, it never feels good to lose, but we're going to look at it in the context of where does this put us overall. And before I even enter in the contracts, you can go back here and see we went through 2 weeks with no losses, had some nice healthy gains there. Now in the last week and a half, we've had a few losses. I firmly believe trading the adaptive entry system, it all kind of balances out, and that's one of the reasons that we focus your attention on the personal trading plan. So instead of looking at just a limited frame of reference, meaning a limited number of days without any point of reference as to where you were, what you were averaging, what your run rate was on prior days, I think that it's really important to look at a full 12-month picture. So that's what we're doing here. So we took 15 trades at 3 contracts per trade. So that's 45 contracts. By entering in 45 contracts, that takes into account the cost of doing business today. So we're down $825 today. All right, so now this is really the important part, and this is where you this is where you put in your forecast based on your actual performance. Now, despite the fact that, you know, I scrolled up and I showed you that we had in the last week and a half a few losing days, you can continue to scroll up and you can see that we've really had a very limited number of losing days, in my opinion. By the way, I just put that in the wrong category. So I'm going to redo that. I just put it on the wrong tab. So forget everything I just said about that. We're going to go over to here. I had it on the wrong tab, so that's important to me. 0.75 times 20, 10.75 times 20 times 3 is minus 645, and 45 contracts. Okay, there we go. So still the same story. We've had some losing days in here, but we've had a whole streak of no losing days, and I do believe firmly that it balances itself out. So here's what we're going to look at. We're going to look at the average run rate of our winning days. We plan in our forecast to have 4 days a week of winning days, and we plan in our forecast to have 1 day a week of losing days. Now, it's not going to always happen 1 day every week, but on an average, that's what we anticipate. And you can see here we had this whole period of time where it's like 2.5 weeks or so that we had no losing trades, and then we got into a period where we have more losing trades. So what matters to me more than the individual days is what is the run rate? And on our winning days, we are averaging 27.25 points, and it's at $20 a point. On our losing days, we're averaging 14.6 points a day on our losing days, but we are 8.4 weeks into our tracking. This is 8.4 weeks of a 52-week plan, and we've had 12 losing days. So 12 losing days is a little bit ahead of our plan to be right around 8 to 9 losing days, so a little bit ahead of plan. So the average loss per day is 14.6. I'm going to bump that up actually to minus 18.5 to reflect the fact that we have more losing days than what we had planned in our forecast. And if that changes going forward, if we go through a series of weeks where we don't have any losing days, that number is going to change and we can adjust it. But for now, I think that 18.5 planned loss for losing days based on the number of losing days we've had is reflective of the overall average. And then I'm going to leave our 27.25 points per day. I'm going to leave that alone for now. The overall average, the blended average between winning days and losing days is 15.29 points a day, or $600 a day. Okay, so now that we've got our winning days and losing days plugged in based on our actual run rates, we're going to take a look at the number of contracts. So contracts are determined by 2 things. If you've listened to this update, end of day update before, you know what it is, but I want to make sure that you're really clear on this. 2 things. First of all, we started this account with a $5,000 balance, and we are willing to allocate 10% of the balance of the account to contracts, to risk. And so by allocating 10% of the balance of the account, we are able to then decide, the personal trading plan is able to help us determine how many contracts we should be trading. We will not actually scale from 1 to 2 contracts or from 2 to 3 until the balance of the account is such that those 2 contracts will still represent less than 10% of the balance of the account. Where we trade at Infinity Futures, we need $500 per contract. So in order to trade 2 contracts, we need $1,000 available in the account to trade 2 contracts. That means if we're only going to trade no more than 10% of the balance of the account, then we need to have something more than $10,000 in the account in order to trade 2 contracts. $1,500 is what would be required for 3 contracts, so we need more than $15,000 in the account, etc. But the other factor in the total number of contracts that we trade is going to be based on a limit that you can put on it. It's a ceiling that you put on the total number of contracts. If I take the cap off, and let's just be ridiculous here for a minute, and I put 100 in there, you can see here that as we scroll through to you know, a year from now, we're not even a year from now, we're only into December, but if I scroll through all the way, the contracts will continue to grow. You know, if I put 500 contracts in here, which I think would be absurd, but the point is the program is just calculating for you based on 10% of the value, okay? You're gonna have some awesome profits if you trade 500 contracts, but hey, that's not practical, okay? So you decide what you want your limit to be. Now, because we're demonstrating this and showing you how to use this tool, every day at the end of the live trading room session, we record our performance and we then show what it would be like if we limited the maximum number of contracts to 3 contracts. And of course, you can do whatever you want, whatever you're comfortable with, whatever you think makes sense for your own personal risk tolerance. But 3 contracts is where we set. So we start with $5,000 using the actual run rate that we've established and forecasting that run rate forward for the remaining weeks of our 52-week forecast gives us about a $268,000 income over a 12-month period. That number will continue to change. It may go higher, it may go lower, simply based on, well, what's our actual run rate? If we end up with a higher number of losing days, that doesn't mean that we're failing. It just means that we will have a smaller overall average of combination between wins and losses. And it just means that our overall profit forecast will be less, okay? So that's the gist of what that is all about. And so now I'm gonna go back to our second category, which I entered the wrong information in. So in this category, we have 25.75 points of profit today, 25.75 at $20 a point, and we're trading 3 contracts. So it's $1,545, $1,545 of profit. And we did 19 trades at 3 contracts per trade, so there's 57 contracts. And you're going to find that as your contracts grow, the number of contracts based on the number of trades is going to be reasonably similar. There's not going to be huge variances. If all of a sudden one day you come along and go, well, geez, I had 100 contracts today. Well, there's probably something wrong. You're taking too many trades. There aren't really that many trades presented to you off of the adaptive entry system. So this is kind of a level set to see, are we really playing within the range that we should be? And that would tell me that we are. So we're going to do exactly the same thing. We're going to go up to the top here. And we're going to take a look at, well, what's our win average? And our winning day average is 34.3 points a day. That's what our actual has been. So I'm going to adjust, even though it's a small adjustment, I'm going to adjust to 34.3. And our losing day average is 20.53. And we are really right on pace in terms of the averages. So we're 8.4 weeks into our 52-week plan, and we've had 7 losing days. So I'm going to leave the planned losing days for the future forecast alone at minus 20.5. So again, if you use a 3 contract max, the income projection is $362,000 over the course of a 12-month period. Again, that may go higher, that may drop, and it'll all depend on what our actual average run rate is. Now, again, let's go back to this maximum number of contracts. You can set it at whatever you choose. If you're ultra conservative and you want to set it at 2, graduate from 1 to 2 and never increase, you know, you're going to have something less than $250,000. I've got some of these hard-coded in at 3, but it'll pick up 2 after that. But you'll be around $250,000. That's a really good income, having started with $5,000 a day, and you're willing to trade throughout the day and take the trend bias signals as well as the continuation signals. If you're a little more aggressive, knowing that the maximum number of contracts will not kick in, will not scale up to that max until there is sufficient funds in the account, that maximum number of contracts will equal no more than 10% of the balance of the account in terms of margin, well, maybe you want to increase your potential income. That is entirely up to you. Whatever you choose for it to be, this variable right here is really important for your planning, but the most important part of your planning, second only to actually trading and producing profits, is making sure that your forecast, your future forecast, is properly based on the actual run rate. You want those to be aligned as closely as possible. So we're pretty excited about the consistency of the performance, and consistency means, hey, we've got some days that were sizable losing days. We had a 42.5 point loss, we had a 59.2 points of loss, but here's a day that we had 121 points of profit. There's a balance between looking at each day and being obsessed with the individual day versus, well, what's my run rate? You know, all I care about is my run rate, and if I'm able to operate, continue to operate at the same run rate, what does that give me as an income? I personally believe it softens a lot of the trader's emotional anxiety when you focus on a 12-month plan as opposed to, I felt really good today, I didn't feel very good today. I felt really good today, I didn't feel very good today. Get off of that emotional roller coaster and focus on what your 12-month potential income could be. And if you really want to have fun, play around with a number of contracts. You know, in this category, if you limit it to 2 contracts, you know, probably $250,000. If you took it to 10 contracts, you know, you could potentially have a 7-figure income over the course of a year. You'll never get to 10 contracts the way the program is designed until you have $50,000 in the account. 10% of 50,000 is 5,000. 10 contracts at $500 each is $5,000. So you'll never get there unless you have that $50,000 in the account. So if you're comfortable with that relationship, then you can increase the number of contracts. One other thing I don't talk too much about is this variable right here. We set it at 10%, but you could lower that. If you want to be ultra conservative, you could lower it to 5%. And what that means is that in order for you to trade 10 contracts, there'd have to be $100,000 in the account, and you would allocate 10 contracts to your trading based on the fact that $100,000, 5% of that is $5,000. And so you can play around with this tool. This is a very powerful tool for being able to forecast the income from your personal trading business. So I'm going to leave that at 10, and I'm going to leave this at 3. Those are very comfortable numbers, especially when you look at the fact that it started with $5,000 and over the course of a year, that's a very, very nice income for you to be able to work from home, trade from home, have your own trading business, and kind of enjoy spending the day with us too, because we enjoy spending the day with you. So I really appreciate you being here, and we're going to go ahead and close out the room now. Look forward to trading with you guys again tomorrow.